I want to bring in Todd Horwitz, Chief Market Strategist of BubbaTrading.com. He joins us from Washington. Todd, I'm sure it's the question everyone's asking you. They're certainly asking all of us. What do you make of this tech rally?
Good morning, Maggie. You know, I think the rally is okay. Again, I think we're a little bit overextended. I think the action that you're looking at is the Dow has now become the strongest index, which would be more of an indication that there's a little bit more fear out there now, and people are moving to more safer asset classes because the NASDAQ, although up big yesterday, has really taken a big hit the last couple of weeks. So overall, I think that we're seeing more caution flow into the market. But without volatility showing up, without the VIX acting any better, the market should continue to probably try to work higher, because without volatility, we assume markets will go higher.
Todd, what do you make of what's happening with oil, and will that impact the market today? You know, there was a time when these things were moving in tandem, and then they weren't, but we've seen a pretty sharp drop in oil.
Well, you know, I think oil, my target on oil was $40 quite a while ago, so I'm not surprised. I am surprised at the speed at which they're going down, but this is one of the things that happens when OPEC tries to manipulate the price in the market and you have the frackers pumping more. We've got such an oversupply that oil looks to work its way lower. Now, again, I would expect to see some sort of a rally here, but again, I still think we're going to 40 or below before we'll see anything, because we don't really have true growth here yet in this country. We don't have a major demand, and we're in the height of driving season. So there's a lot of reasons to believe that oil can work its way lower, but at the end of the day, it should probably have some effect on the markets. But as I look at the futures right now, the futures are ignoring that oil is going lower, and they're still a little bit higher this morning, including the NASDAQ. So, you know, again, the markets right now decide they want to go up. They're chasing yield, and the only place to get it right now is in the stock market.
Yeah, that's right. Fed trying maybe to do something about that, although, you know, at the margin, it sounds like from the rhetoric we're hearing, they're still on track to continue raising interest rates. A lot of people not sure about that outlook, given what we're seeing with inflation. What are you expecting? What are Fed Fund futures telling us?
Well, you know, the Fed, in my opinion, has totally blown the entire situation. I believe that they should have raised a long time ago. I think that we need to get rates rising so that we can bring back small business and entrepreneurs. We're seeing the smallest growth in entrepreneurs in 10 years now. So the problem is you don't create jobs, and you can't create growth unless you bring small business. And without money from the banks, you don't get it done. So with the rate so low and not really allowing the markets to be free and discover price, when you have a manipulated interest rate, which also manipulates the stock markets, then it makes it much tougher for the markets to actually decide where we're going to go, which leaves the interest rates way too low. We need to have more of a free market system where we get away from all these people that are trying to fix the economy by adjusting interest rates or doing this. Let the markets trade, and then we can get a better idea.
All right, interesting. That's what we've been hearing from a long time from people like you. We'll see if the Fed can stay on course. Thanks so much for joining us, Todd. Appreciate it.